Is it better to rent or own in this market? In case you haven't heard, it's a crazy, crazy real estate market out there. If you are currently renting, you might be wondering, is this really a good time to buy? Well, today we're going to go into a detailed look at the numbers to help you decide if it's better to rent or own in this market. But before we do, please do me a favor and subscribe to this channel. I've been helping people realize the dream of home ownership for over 25 years, and I truly do have a passion for sharing information. So please subscribe and become part of this community. Okay, renting or owning in this market, which is better? Well, one thing that might be holding you back from buying a house today is the word on the street is there's not enough homes out there for one to purchase. Well, I'm going to challenge you on this. There's not a lot of rental homes either. And so this is becoming one of those things that is not quite talked about often, but it is a reality. So here's the deal. If you're currently renting, know that your owner of your house has just gained a huge amount of appreciation, especially if they've owned that house for the last couple of years, which means that when your lease is up, they may decide to sell. I can't tell you how many buyers I'm talking to today that are calling me stressed out because now their landlord has decided to sell the house, which means they do not have security about the future. So one, they need to go buy a house, or two, they need to go find another house that they can rent. And guess what? Rents are going up like crazy in this market. So on average, between Phoenix and Scottsdale, the average rental cost has gone up 10% year over year. And I would tell you that's really going to be low because based on the area that you're in, the size of the home, etc., that could be 50% increase in rents. I mean, we are seeing it every single day. And not only that, just to rent a home, we're not talking apartments, but we're talking a home, which people with families and dogs or pets, they want a home. Apartments don't necessarily work for them. So in that situation, if you are looking to rent a home, guess what? You're going to be in a high competition to get your rental application even reviewed, let alone accepted. So the rental market is as hot as the real estate market. And so when we think about renting, what are some of the benefits of renting? Well, it's essentially you have a 1-year commitment. Okay, so if you are in transition in your life, or maybe you have had credit issues and you're starting over, then renting an apartment for 1 year is probably what you're going to have to do. But before you make that decision, really talk with a lender to try to evaluate, okay, if I have to rent for a year, what does it look like next year? What do I need to be doing to prepare to buy a house next year? Or if your rent is increased by 10, 15, 20, 30, 40, 50%, are you prepared to pay that rent amount next year? Or are you prepared to move? So when you're in that rental situation, it has benefits because it's short term. But if you're looking for that security and longevity of knowing what your rental payment is, in this market in particular, you're not going to get that. So when we think about purchasing, yeah, there's a lot that goes into that, purchasing a house. But many times people overlook the actual long-term benefit of purchasing a house. So one, it gives you security. You know what your house payment is going to be every single month because it's not going to change based on the amortization of your loan. So if you're doing a 30-year fixed rate, that principal and interest component of your payment stays what it is for 30 years. It's not going to change. So the components that will change on a house payment will be property taxes, homeowners insurance, and if you're purchasing a home that has a homeowner association, that can increase. But the true loan payment, it's fixed. So you know exactly what you are looking at in the years to come. The second component is you decide when you move, not your landlord, because they want to sell the house or they're going to double your rent. So now you can control that idea of, okay, I got a lot of stuff, I got to move. And then the other thing to consider is just how so many Americans have used real estate to build wealth over time. And that's really what I love about this rent-to-own analysis. So let's take a field trip over to my computer, hop online, and let's take a peek at these numbers to really get a sense of What does it look like if you're renting, and what happens with those monies over time, and how much are they? Like, what do they add up to? And then what happens if you take the plunge, buy a house? What is going on with your wealth and building equity over time? Let's take a look at the numbers. In this scenario, I'm using $1,700 in rent and $25 a month in renter's insurance for the rental component. And then I'm going to show 3 different estimated payments on a $350,000 house, a $400,000 house, and a $450,000 house, all with a 3% down payment at today's interest rates. So in these scenarios, you're going to see that to purchase a $350,000 house, your overall housing expense will increase, just money out of your pocket every month will increase a little bit less than $200 a month. So not bad, right? But you're thinking, well, it's still an increase. It is, but it's not. So I'm going to show you how it's not. When we go to the $400,000 price point, your overall payment is increasing by roughly $400 a month. And then when you get to that $450,000 price point, your overall housing expense seems to feel like it's increasing by about $700 a month. But there's something that's really, really important that people don't talk about. When you pay a house payment, so you borrow money, you take out a home loan, your payment is comprised of different elements. So the first and foremost important part of your payment is the principal and interest part, which is actually the payment for the amount that you borrowed. So every month when you pay the principal and interest portion, so if you go into the payment breakdown of this analysis, you're going to see that out of that payment of $1,890 a month on the $350,000 purchase price, $1,500 of that is actually going towards the loan payment. Out of that $1,500, $546 of that is your money, because that is going to the principal portion of your principal and interest payment. The rest is interest. Yes, that's what the cost is for you to borrow the money on the home loan. But $546 a month on this price point is going towards your equity. So it's like a built-in savings account. So once you account for that savings that you're doing every month and the principal portion of your payment, and you really start to look at this net monthly payment in the $350,000 price point, this drops your net monthly payment to $1,344. So if you're paying $1,725 in rent, and after your principal payment, because again, that's your money, that's your savings, that's how you're building equity through home ownership together with appreciation, your net payment is $1,344. This is the exciting part of how the numbers work and really how home ownership will build wealth over time. So let's continue. So as we take this thought, and now we already know what the net dollar amounts every month are going to increase if you're purchasing in these price points, what that automatic savings that's built in towards the principal component of your payment. But let's look at what happens over time, which is why I absolutely love Mortgage Coach and using their total cost analysis. So in this scenario, we're going to see that in 5 years, if you just continue to be a renter, in 5 years, based on a 10% annual rental increase, because guys, it's happening. That's our average rent increase here in the Phoenix metro area right now. And I will tell you that's an average. That's not specific for all neighborhoods. It is far more in some neighborhoods, but I'm just using 10% for this analysis. So in 5 years, in this scenario, one will have paid $126,000. That's right, $126,000 in rent, and not have anything to show for it, essentially, other than maybe freedom. And I would question whether you have freedom if you're renting right now. But in 5 years, remember that principal component that I talked about out of your principal and interest payment? In 5 years, you will have paid towards principal on the $350,000 scenario, $35,000. On the $400,000 scenario, $40,000. And on the $450,000 scenario, $45,000 towards your equity, which again is a built-in savings account. So, I mean, that is pretty exciting. But wait, it gets better. So now let's take a look at these numbers over time. And let's say in 15 years, at an annual appreciation rate of 6% per year, which is very, very conservative right now. But I want to be conservative. I want these numbers to be real. And so in 15 years, this analysis is going to show you if you purchase a $350,000 house today in 2021, in 15 years, you will have roughly $636,000 in net worth based on the appreciation of the home, as well as that principal payment that you've paid every month now for 15 years. So $636,000. On the $400,000 price point, that goes to $724,000. And on the $450,000 price point, that net worth is over $800,000 in 15 years. Whereas if you continue to rent, then your net worth in 15 years, based on that initial $25,000 that we allocated that you had in savings for the scenario, is roughly $25,000. So that in itself is the magic. That is where investing in real estate really does change the overall fabric of home ownership in this country. So we're back. So that's it. Now you've had a look at the numbers, and this should give you a better idea if you decide to buy a house, what it might look like. If you decide to stay and rent in a house, here's what it looks like. It all comes down to you and your personal scenario and goals. If you're in Arizona, California, or Colorado, and you'd like me to put together an analysis just like this for you, please feel free to call or text 480-725-0150. Otherwise, if you have questions, comment below. And don't forget to like, share, and subscribe. Until next time.